exceed the limit of at least two of the following three criteria: balance sheet total of 6.2 million, net turnover of 12.8 million, and average number of employees during the financial year 250. So we're kind of seeing like a very, very large organization essentially, with those limits. So it's quite a lot of companies would probably fall within those thresholds. So what is the proposed new rules? So essentially, the new definition will keep the product-specific provisions from the contract of large risk definition. So that means firms distributing contracts covering things like aviation and marine risks, the firm will continue to be excluded from the scope of most ICOB rules. Where the policyholder is commercial customer and the risk is located within the UK. What the Financial Conduct Authority is looking to do is to apply the FOS eligible complainant thresholds for commercial customers and non-investment insurance contracts. Anything above that threshold means commercial customers are outside of scope for product governance, consumer duty, and ICOB's rules. Products that automatically qualify as large risk, e.g. aviation and marine, continue to be excluded from some ICOB rules, as mentioned before. But the FCA principle for business, BRIN rules, and other high-level rules continue for all customers, including customers' best interest rule, which acting in the customer's best interest rule, which applies to all customers, including large insured customers. So what does that mean in practice? So essentially, what we're looking at is a situation where you're probably going to have some products that you're going to put through the governance process, and some where if they are outside of the FOS eligibility criteria and sort of leaning on the side of being a large corporate business, you don't actually necessarily have to follow those same product governance rules. But in all honesty, you might want to just continue doing it anyway, in all honesty, because in theory, where you're selling sort of policies or products to large corporate businesses or insurance, they're generally probably going to be considered low risk products. So your checks and due diligence for those products are going to be much more lower than the checks that you will complete for, let's say, more high risk products. So products like car insurance, home insurance, where you know you're selling those products to individuals. Where there might be a bit of a grey area might be where you're dealing with maybe landlord insurance, where you might not necessarily know how many properties that landlord has, how much business that landlord actually generates on an annual basis, and to decide whether they are considered, beneath the new FOS eligibility criteria thresholds or above that limit. Okay, so who is eligible for the Financial Ombudsman Service? So you've got individuals, with us individuals like me and you, micro enterprises, and SME businesses. So what is a micro enterprise? A micro enterprise is a business which employs fewer than 10 employees and has an annual turnover of or balance sheet that does not exceed 2 million euros. So that still could be quite a large business, especially if that is quite a big annual turnover. SMEs, a small business a small business which is a business that is not a micro enterprise, has an annual turnover of less than 6.5 million, and has a balance sheet total of less than 5 million, or employs fewer than 50 employees. So that certainly is a much larger organization, but still much smaller than, the original definition. So firms will be in a situation where they are applying a lot of the consumer duty rules, consumer duty, product governance, and ICOB rules to businesses that are up to that 250 employee limit and that previous limit of 12.8 million to annual turnover, or whatever, roughly whatever that one is. And now they don't actually have to apply those rules anymore. And the rules are shifting to only protect these type of customers. So anything from an individual up to an SME type business. And again, I've mentioned this in previous training sessions, but the rationale for this is that the FCA believes that these type of businesses are less sophisticated and are less likely to have access to maybe professional advisors or lawyers who are going to be able to um, negotiate insurance contracts on an equal footing to insurers. Um, so if you think about a sort of a sliding scale, you'd probably put products that are sold to vulnerable customers. So let's, for example, mobility scooter. There's some mobility scooter products out there. You're gonna tend to say that most of those customers are vulnerable customers because they they require a mobility scooter to get around. If that mobility scooter is damaged and they no longer have it, that's really going to impact their quality of life. And as an insurer, really should have robust controls in place around managing those risks, ensuring that you're able to process claims very quickly because the impact is going to be significant. Um, but also SME type businesses and micro enterprise businesses, if they're taking out business protection insurance and um, this is their sole source of income, the business, for example, sustains fire damage, and as your claims process, you're sort of dragging your feet to manage that claim and get it resolved. That is going to have a massive impact on SME or enterprise type business, and your conduct as an insurance company could um, lead to that business being impacted more than actually necessary. Your screen sharing is paused. Okay, let's resume.